Traders, today I am sharing one working Elliott Wave hypothesis. This is not a prediction, this is not a signal, this is a structured way to read price behavior. We will look at market structure, not emotions. We will respect what price has already done, and we will clearly define what can happen next and what can fail. Traders, we start from the 26th December all-time high at 4549. After this high, upside momentum clearly weakened. Price stopped behaving like an impulse. So the main question is simple. Is the market continuing higher, or is it correcting before the next major move? From 4549, price declined sharply. This decline was fast. It was directional. There was very little overlap. Multiple supports were broken. This move terminated near 4274. Traders, this behavior allows us to confidently label this entire move as Wave A. Now traders, some important clarification. Levels around 4302 and 4404 are internal subwaves. They are not wave terminations. These are pauses inside the larger decline. The true termination of Wave A is near 4274. This distinction is critical for correct Elliott analysis. After price reached 4274, behavior changed. Candles started overlapping. Momentum slowed down. Price began rotating instead of trending. This is no longer impulsive behavior. Traders, this change clearly tells us that the market has entered corrective mode. Now traders, I present one working hypothesis. Wave B is unfolding as a zigzag correction. That means an A, B, and C structure. This is not the only possibility, but it is a valid one under Elliott rules. We will treat it as a hypothesis, not as a fixed outcome. From 4274, price moved up toward 4402. This advance unfolded in three waves. It lacked impulsive expansion. This behavior is typical for an A of B move. So traders, we tentatively label this leg as A of B, nothing more. After reaching around 4402, a pullback is expected. The projected zone is near 4299. This pullback should remain overlapping. Momentum should continue to weaken. Very important, traders. As long as price holds above 4274, this hypothesis remains valid. If B of B completes near 4299, we can project C of B. Using symmetry, A of B is approximately equal to C of B. This gives a projected resistance near 4429.69. Traders, this is a projection, not an obligation for the market. Let us look at the strengths. This hypothesis respects the impulsive structure of Wave A. It explains current overlapping price action. It aligns with weakening momentum. Most importantly, it has a very clear invalidation level. From an analytical point of view, this makes it structurally sound. Now traders, the risks. B waves can truncate. Price may never reach 4429. Wave B can also become complex, like a triangle or a WXY structure. The biggest danger is emotional attachment to projections instead of reacting to price. If and only if Wave B completes, then we expect the actual Wave C of the larger pattern. This C wave should be impulsive. It should unfold in 5 waves. Momentum should expand strongly. This move will feel very different from the current corrective behavior. Downside targets align with the lower boundary of the marked channel. This places the focus into the 4100 region. Traders, exits should be based on structure, not on hope or fixed numbers. Always let price confirm before committing fully. This hypothesis has a hard invalidation point. If price breaks and accepts below 4274, this entire structure fails. No relabeling, no adjustment. At that point, either Wave B has failed or Wave C has already begun.